All right, mate. Let's look at DOT here. Yeah, sorry for the late reply. My sleeping hours are a bit messed at the moment. I was actually just going to bed at about around this time yesterday, 5, 6, maybe 7 o'clock. I went to bed at, trying to get my sleeping hours right. But DOT is very interesting. The one thing I will say about DOT is, at this point, right? At this point, you know, it has got very good relative strength. It is only down 88%. You know, Bitcoin is down 75% at this point. So, you know, it's holding up fairly well, considering that it had a moon. Now, I'm wondering, is this the largest chart? That was down at $2. Yeah, so I checked a few other exchanges there. This seems to be the largest chart at this point in time. It is interesting, I have to say. Like, to me, this looks potentially beautiful, right? If you look here, there is when you get a large market drop and then you start to get small doji candles, that offers the potential for a reversal, right? That it really does. For a number of reasons, especially when you're down pretty bad, like DOT is doing. Now I just have to go back here to show you an example. Now, not the best example, but you know, when the market drops and it's down, well, this was down 84%, but you get the doji candle and then it offers a chance to move back to the upside. Will DOT get the same bounce? You know, time will tell. But what I will say, Bitcoin's got the same thing here. I drew these yesterday with gold, so that's why they're there. But this is potentially a failed move down. If we move straight back up and take out this green line again on a new 3-month, you know, that is technically bullish, because that's a failed bear flag down. And just like it was a failed bear, it's a bear flag, and it broke down, but all of a sudden it can't continue that trend. It's breaking back up, and when you get a failed move, well, you can see what happened. Well, price then had bullish consolidation and broke up. Now, I want to take you to the NASDAQ, just for example, because a lot of people like to use this comparison. Now, what happened at the very, very lows? Well, at the very lows, you got 2 doji candles, right? There was actually a push down in this, which is interesting. But when you get 2 doji candles down here at the moment, at the lows, well, what happened? Well, especially when you start to break up above those, that line didn't work. When you break up above those dojis, well, that's obviously very important. But you could also say that there was this base here, and that was a bear flag, but that bear flag broke down, but it failed and broke back up. And from that breaking back up, well, price obviously moved to the upside. But for me, the important thing was the dojis. Now, what is a doji? Well, a doji is a potential sign of indecision in the market. And that indecision in the market was an indecision in the sellers, thinking, well, hold on a minute here. There's probably not too much more downside. I'm going to get rid of my shorts, or I'm actually going to start to buy this because I'm liking this discount. And that's what the doji will do. It gives you an indecision. It gives the market an indecision in the downside. There was a doji here, but the trend was still strong to the downside. It continued. But obviously, if we go back to DOT, we are now getting some dojis. And, you know, Amazon had 2 dojis, then 1 more candle to the downside before reversing back to the upside, and you know, it bounced back and then it moved hard to the upside. Well, I mean, the bottom was in, and then we moved up. But these 2 dojis look to be extremely important. Sometimes you might get a flush lower, and sometimes not. Now, the logical thing to say here is, you know, it's a knife catch if you buy right now. If you're willing to, it looks like a decent average and down point. You know, if you buy here and the market does flush lower, you end up going to having a very, very nice buy point in DOT. In theory, at least, it should be a very good buy point. You know, you never go all in on any position, but you know, unless you have very, very good risk, maybe you get a bullish monthly stop hunt with a 2% risk, and you go all in on it with a tight stop. You know, But you need to know your risk and you need to stick to your plan if you're doing something extreme like that. But I'm definitely not saying do something like that, but I'm just trying to say you don't go all in. Be prepared to add lower if it does happen. That's the safe way to do it. I myself I'm thinking about buying some DOT. But the other side of the spectrum would be, the safe way. If we, for example, if we flip green on a new month, a new quarter, I meant to say, something like that. What if we get another bullish stop hunt? Well, that would be amazing, right? That would be the perfect signal. Actually, I'm gonna set an alarm on this low right now. Right there. If we happen to get a bullish stop hunt on that, that would be absolutely delightful and wonderful. The other way is, if you do miss that, if it pops up and flips green again, well, you want to be getting involved on that with your stop below the quarterly low. So that's the safe way to play it. But the problem is, what if it bounces now and this flips green and you've missed kind of the buy on the lows? That's the risk you take by waiting for a new quarter. So I like DOT. Personally, I think it's good for averaging down. The only reason I've not even started buying averaging down is because I've got a lot of coins at the moment, and you don't want to be putting your money too much into the market too soon, in case that we have a real recession, and crypto's never had it before. So if the Fed weren't quantitative tightening, if they were still printing money, if the market was the way it was in 2018 or in 2020 after the coronavirus, I would be probably emptying all my bank accounts and trading accounts into the market down and around here. But being cautious, I'm obviously saving quite a bit of money in case things actually do keep going down, to protect myself, to be able to average down, to give myself a better average entries. But my honest feeling is that these are decent, but always need to be willing to add lower. Like in 2018, 19, whatever, Ethereum dropped 94%. DOT has not done that yet. I'm not saying it has to do that, but just as a guide, if this did drop the same as Ethereum in the last bear market, well, that would be $3.30 for DOT to be at the lows. So I've stated many times that a new 2 week is going to be critical, right? A new 2 week is going to be critical. That is when we are going to probably understand if this market is going to flush lower or not. At this point, this is a bearish engulfing candle with the potential of more downside. So we do need to be open that this could give continuation to the downside, right? So maybe the quarter is not going to finish as good in such a small doji as we have it, but the new 2 week, if we get a flush lower, for example, in a similar sort of candle we got there, well, that means that we are getting close, very close to that 94% drop. That would be fantastic. I would probably definitely buy some DOT then if we got that. So we don't know if this is going to be the bottom. This is a bearish pattern actually, and it looks like it's best to wait until a new 2 week to see what we get. This is also a bearish monthly candle. It's a bearish outside bar on a monthly, implying that we should go lower. The last time that we got a bearish monthly outside bar was right there, and you can see that the next month we got continuation to the downside. We also have a bearish monthly outside bar here that looks like it wants to go lower. So it might be best to wait here. Problem is there's 15 days left for this. At the very least, it's probably good to wait and trade a 2 week candle. If you're really aggressive, you could try and long when it flip green and see if this can kind of flip up. But that is very risky. I think it's best to have a little bit of patience at the moment and kind of let the market give us more clues. The total market cap has not reached the desired target area yet, and we have a volume gap there also.